If you've never collected sales tax in your life and your business just hit $10,000 in revenue, I have some uncomfortable news for you. There's a very real chance you already owe sales tax in 2, 3, or even 5 states right now, and you don't know it. Not because you did anything sneaky, not because you broke the law on purpose, but because the rules changed in 2018 and almost nobody told new business owners what that actually means. Today, we are going to fix that. By the end of this video, you will know exactly when you owe sales tax, how to figure out which states are after you, and the simplest possible way to stay clean without losing your weekends to paperwork. The stakes are higher than most new owners realize. Sales tax is a trust tax. That means when you collect it from a customer, you are not collecting your money. You are holding the state's money. And states do not play around when their money goes missing. The average sales tax audit hits a small business for between $14,000 and $23,000 in back taxes, penalties, and interest. And here is the brutal part. If you should have been collecting and you didn't, you don't get to go back to your customers and ask them to pay it now. It comes out of your pocket, out of your margin, out of your kids' college fund. That is why this episode matters. 3 hours of work this week can prevent a 5-figure surprise 3 years from now. Let's start with the single most important concept in sales tax: nexus. Nexus is a fancy word for connection. It is the legal trigger that says this state has the right to make you collect sales tax. There are 2 kinds of nexus you need to know. The first is physical nexus. Physical nexus is the old school kind. If you have an office, a warehouse, employees, contractors, inventory in an Amazon warehouse, or even the trade show booth in a state, you have physical nexus there. Boom, you owe. The second kind is economic nexus. And this one is the silent killer. Economic nexus says even if you have 0 physical presence in a state, if you sell enough into that state, you trigger nexus anyway. The threshold in most states is $100,000 in sales or 200 transactions in the prior year. Some states are lower, some are higher. California, Texas, and New York all have their own rules. The big lie new owners tell themselves is, "I'm a small business, this doesn't apply to me." It applies. The Supreme Court decided that in 2018 in a case called Wayfair, and it changed everything. Okay, so let's say you figured out you have nexus somewhere. The next question is, what is actually taxable in that state? This is where business owners go cross-eyed, because the rules are wildly inconsistent. In some states, software as a service is taxable. In others, it isn't. In some states, a haircut is taxable. In others, only the products you sell along with the haircut are. In Pennsylvania, marshmallows are tax-free unless they're miniature, in which case they are candy and they are taxable. I am not making this up. The point is, you cannot guess. Every state publishes a taxability guide. Read it once for your top 3 states, make a 1-page cheat sheet, tape it to your monitor. Future you will thank present you.
Now, collection. This is where most new owners trip. If you owe sales tax, you collect it from the customer on top of your price at the time of sale. You do not eat the cost. You do not bake it into your price and call it a day. You charge it as a separate line item, and you keep that money in a separate sub-account until you remit it to the state. The number one mistake I see is owners who collect sales tax, deposit it into their main operating account, spend it on rent, and then realize at filing time the money is gone. That is not just bad bookkeeping. That is, in some states, embezzlement. A separate sub-account labeled sales tax holding is the simplest fix. Every dollar of sales tax goes in, no dollar comes out until the state asks for it. The amount you collect is based on the customer's location, not yours. That is called destination-based sourcing, and it is the default in most states. Filing and remitting is the last piece, and it is the easiest one to systematize. Every state assigns you a filing frequency, monthly, quarterly, or annually, depending on how much you collect. They will tell you what yours is when you register. Set a recurring calendar reminder 3 days before each due date. File online through the state's Department of Revenue website. Most states give you a discount of 1 to 2% for filing on time, which adds up. If you owe sales tax in more than 2 or 3 states, look at software like TaxJar, Avalara, or Anrock. They cost between $50 and $300 a month, and they handle the registration, the calculation, the filing, and the remittance for you. The math is simple. If they save you 1 hour a month per state, they pay for themselves in week 1. And if you ever do get audited, having a clean trail of automated filings is worth 10 times what you paid for the software. So here's the recap. Sales tax is a trust tax. You hold it for the state. Nexus is the trigger. Physical nexus is presence. Economic nexus is volume. The 2018 Wayfair decision means almost every business with online sales has nexus in more states than they think. Check your top 3. Get a taxability guide. Collect at the point of sale. Park it in a separate sub-account. File on time and use software once you have 3 or more states. Do this once this month, and you will never lose a weekend to sales tax panic again. If this video saved you from a 5-figure audit, hit subscribe and drop the word Nexus in the comments. I read every one, and I'll send you my sales tax registration checklist for the top 10 states. Next week, we're getting into something I get asked about more than anything else on this channel: how to set your prices so they survive a slow month. We will cover floor pricing, cushion margins, the 3-tier rule, and how to raise prices without losing your best customers. If you are pricing on gut feel right now, that episode is going to change the way you run your business. New episodes every Tuesday and Friday at 7 a.m. Pacific. See you Friday. Stay solvent.
Before I let you go, I want to walk through 3 real situations I see new owners get blindsided by, because the textbook explanation only takes you so far. Situation 1. You sell digital products, online courses, templates, ebooks, software downloads. You think because it's digital, sales tax doesn't apply. Wrong. As of this year, about 30 states tax digital products. The rules vary. Some only tax software. Some tax everything digital. Some tax only when it's downloaded versus streamed. If you sell digital products and you have hit $20,000 in revenue in any state, you need to check that state's digital goods rules today, not next quarter. Situation 2. You sell through a marketplace like Amazon, Etsy, eBay, or Shopify with a marketplace facilitator. In most states, the marketplace collects and remits sales tax on your behalf. That is the good news. The bad news is those sales still count toward your nexus threshold. So even if Amazon collected the tax for you on a sale to Ohio, that sale still pushes you toward the $100,000 Ohio threshold. And if you also sell direct on your own website, you can blow past the threshold on direct sales without realizing it because you were mentally counting only the direct sales and forgetting the marketplace ones already counted. The fix is simple. Pull a sales report by state, total all channels, and check it against the threshold every quarter. Situation 3. You hired a contractor in another state. Maybe a freelance designer in Florida, a virtual assistant in Texas, a fractional bookkeeper in North Carolina. In some states, having a remote worker is enough to trigger physical nexus. The threshold is not money, it is presence. Even one contractor in some states is enough. Before you hire across state lines, spend 10 minutes checking that state's nexus rules for remote employees. It might save you a registration headache later. One more thing before the recap: registration. When you decide you have nexus in a state, you do not just start collecting. You register with that state's Department of Revenue first. Registration is free in most states, takes about 20 minutes online, and gives you a sales tax permit number. You put that permit number on every invoice in that state. If you collect sales tax before you register, you are technically collecting illegally, even if you intend to remit it. Always register first, then collect. The order matters. The number one piece of advice I can give a brand new owner on sales tax is this: do not try to figure it out perfectly on day one. Do an annual review. Pick one Saturday in January, pull your sales by state, check the thresholds, register where you crossed. Catch up on anything overdue with a voluntary disclosure agreement, which lets you settle back taxes for a reduced penalty. Sales tax is a marathon, not a sprint. The owners who get crushed are the ones who never look. The owners who survive are the ones who look once a year and adjust. That is sales tax, trust tax, nexus, taxability, collection, remittance. You now know more than 90% of new business owners about how this system actually works. You are no longer flying blind. Use it.